Well, folks, one of the top stocks in the entire stock market over the past 5-10 years is Celsius Holdings, and this stock is getting absolutely obliterated here today. It's down 17 percentage points. Yes, 17% today. So we're going to speak about this stock, what's going on here, my opinions on it. Do I view this stock as a buy? Is this a buy the dip opportunity? Is this kind of like, be wary of this situation? And I'll speak through this one. I think it's an important stock for somebody like myself to talk about because I used to be invested in Monster Beverage for many, many years, quite a while back, right? And then we're going to get into NVIDIA. So 2 videos to react to in regards to NVIDIA. NVIDIA stock has an awful lot of growth ahead. Looking forward to reacting to that one. And then this one, NVIDIA is heading toward $10 trillion market cap. Who was the first person to call out that number? We'll see what they have to say in regards to that. NVIDIA is definitely starting to reach a real... NVIDIA actually hasn't really hit the major hype cycle in regards to stock price yet, but it's getting there. And I can tell you these sorts of videos, we're getting there, okay? We're getting there. Alrighty, guys, I appreciate you joining me as always. Let's jump straight into this. All I need from you guys real quick, takes less than 5 seconds. Smash the like on this video and make sure you subscribe to the channel. That's all I need from you, and let's go ahead and rock and roll, okay? So Celsius getting destroyed here today, right? And as I told you guys, this is one of the best stocks literally in the entire stock market the last 5-10 years. Look at the 5-year return, 5,800% in a 5-year. That is absolutely, utterly ridiculous, by the way. Look at the day. NVIDIA is having 7.6% up. Whew, smoking. So Celsius, amazing stock, right? And it's gone through some very volatile moves up and down over the years, right? Here it's about 21 bucks a share, drops down to about 14. Here it goes up to about $36 a share very shortly after. It crashes down to $14 there, right? Here it goes up to about $66, $67, crashes down to $49 there. And not even that long ago, if you go back to March, the stock's about 92, and then it dropped all the way down to about 68 bucks right there, right? And so it's actually higher than it was back in April. So that's just a little food for thought in regards to that. Then it went through another big cycle, and then now obviously massive downward move, okay? Now, what's going on with Celsius? Why is the stock crashing 17 percentage points here today, right? Which I think everybody's kind of curious about. And then we'll talk if it's a buy. Well, here's what's going on with Celsius. Celsius slumps after Nielsen data cools a bit. Now, Nielsen's basically a company that they have like the transaction data for how many different products are being sold. So for instance, back when I used to own Monster Energy back in the day, Nielsen data, they would bring that up all the time, and how the track channel data from Nielsen was doing versus their peers, their competitors for the energy drink category in general. And then you got to know, okay, the energy drink category, because that was always important for Monster, is growing at X number, and Monster's growing at this number, so you'd want to see their growth outpacing that, right? So here's the deal. Celsius slumped in early trading on Tuesday as it's more than slumped, it crashed. It's down 17% as analysts digested some of the latest Nielsen retail store trends. Morgan Stanley analyst Dara noted that Celsius sales growth slowed sequentially. Okay, that when you're in a growth stock, this is so important. I explained this in regards to NVIDIA. And if you want to know when NVIDIA stock will start crashing, it's when NVIDIA essentially, on a sequential basis, they stop growing at the pace they've been growing at. Let's just call it, they're growing like 5% or less. And on a sequential basis, that'll be the moment that NVIDIA stock will likely crash heavily, right? And so for Celsius, sales growth slowed sequentially to a 39% pace for a 1-week period ended May 18th. That's going to spook investors in regards to a growth stock with this sort of valuation. And its market share dipped to 10.5% for the latest week from 10.8%. Of note, Celsius pricing for the latest tracking period was down 7.2%. year over year. Okay, so we got problems in pricing, right? Pricing down 7.2%, and then we've got problems in market share, right? Now, it's a 1-week period, okay? So you can't go too crazy with this. It's a 1-week period, but when you're a growth stock with a big valuation, a forward P of 70 something, right, which is triple that of what the market's trading at, if not more than triple what the market's trading at, right? Any piece of bad news is going to freak people out. And if you're talking about sequentially, your growth rate going down, if you're talking about losing market share, if you're talking about pricing being down, these are all things that are going to freak people out in a major way when it's a big valuation stock. And that's how you can see even though it's a 1 week period, a stock moved down 17 percentage points here today, right? Morgan Stanley has a cautious near-term view of Celsius. The firm sees a robust runway for Celsius in the United States from increasing items per store, right? So just basically more shelf space. Improving placements in coolers, so that would be more prominent space. Usually if you're a drink company, you want to be somewhere around the 4.5 foot level to about the 5.5 foot level. That's usually the best, maybe 6 feet. That's like, how tall are people, right? like people are usually 5 feet tall, 6 feet tall. So that's right around the exact place you really want, obviously, your shelf spacing to be, right? Morgan Stanley has a cautious view, as we said, right? And growth in non-track channels, but warning that difficult sales comparisons over the next several quarters could cool sentiment as Celsius cycles the distribution and velocity growth since the Pepsi distribution began. Now, whoo boy, okay, so first thing I want to start out here, so speaking about Celsius, and we'll get into NVIDIA, is we spoke about it's had some crazy periods in regards to stock, but I want to take you back to Monster, which back in the day it used to be called Hansen's Natural Beverage, okay? So Monster, when they started growing, product launches around 2002, right? And the growth rates were ridiculous, absolutely ridiculous for Monster for many, many years, right? And so right around here, roughly, is where Monster got launched, right? So we can say it was like a 2 cent, 4 cent stock, 5 cent stock back then on a split adjusted basis. And then by 2006, the stock price went all the way up to about $4, right? So yeah, if you had a few $1,000s in that stock back in those days when Monster launched, you got filthy rich off a few $1,000s, literally. Like, it's insane, right? But then massive crash down, right? Over a period of time there. So the stock goes from about $4 all the way down very quickly to $2.31. So what happened here? I would almost guarantee you it was something happened in which sales numbers looked a little weak for a given time period. Then the stock goes parabolic from about $2.30 all the way up here to October 2007 at about $5.67, right? And then what happens after October 2007? I hope you know the great financial crisis hits, right? And the stock market gets absolutely destroyed. And especially growth stocks, specifically, they got hit even harder. So Monster went from a stock that was $5.67 down to a price of under $2 a share, right? And absolutely obliterated. Then growth rates start coming back. It makes a parabolic run. It bottoms out in 2008. Actually, it bottoms out before other stocks bottom. A lot of other stocks didn't bottom till around here, February 09. Monster had already bottomed in the summer of 08. But it goes from less than $2 all the way to $12 in 2012, right? Absolutely epic. Now, when I got in Monster, it was kind of around, we can call it, I was buying Monster shares on and off kind of around this entire period here, right around there. And then Monster, and especially this one, really got me interested in Monster in a major way to invest, because it went from 12 all the way down to about $7 in a very quick amount of time on a split adjusted basis, of course, right? And then it went on another epic run, right? Stock came back, but at the end of the day, like, we know what they did. But that's Monster, right? And so Monster was tremendous stock over time. We can see the gain, 63,000%. It's literally one of the best stocks in the entire stock market the past 20, 30 years. But the deal is, in regards to Celsius, is can they become a monster? That's what they got to do. If you're talking about this sort of valuation, right? Celsius has to become a monster. They have to become a $50 billion, $100 billion type company, a massive drink giant. Because when you look at Monster Energy nowadays, it's not just Monster. They've got a million different flavors and different types of Monster, right? And then additionally, on top of that, they also own the Reign brand as well. They also own Bang Energy nowadays. If I recall, they also own NOS Energy. I mean, they own, nowadays, you go into a convenience store and you look at the energy drinks, and Monster owns many of the brands that are there. It's not just Monster now at this point in time, right? So, can Celsius become that? Well, here's the deal. Celsius is trading, obviously, very, very rich. I mean, look at the forward P. It's significantly higher than even a stock like NVIDIA, which is, whew. But these drink companies are usually looked at as some of the holy grail of business models. SaaS companies are the holy grail of business models, but then drink companies are almost like SaaS companies a little bit in terms of what people are willing to pay. Why are people willing to pay big premiums? Like you look at Coca-Cola and Pepsi, even those stocks usually trade at a premium to the market. And I mean, the big days of soda growth is long gone. We all know that, right? And so you're looking and you're like, why would people be willing to pay significantly over market multiples for drink companies? I'll explain why. If you think about a drink company, right, you think about getting somebody in your ecosystem and then enjoying that product day in and day out. And then every time they go to the grocery store, the convenience store, the club store, right, Costco, Sam's Club, they're buying that same product again and again and again. And with energy drinks specifically, they're very addictive products. We all know this, right? There's massive amounts of caffeine, if you know anything about the human body and the mind and all these sorts of things. Very addictive products, okay? Celsius sells very addictive products. Monster sells very addictive products. Celsius, some of their products are insanely high in caffeine and other things, right? And so, nonetheless, people don't just drink them because they like them. They drink them because they become addicted to them, okay? And so that's the kind of the magic in regards to these business models. So then somebody starts drinking Celsius, and then they're still drinking Celsius 6 months later, 2 years later, 4 years later, unless they feel like, it's negatively affecting their health, and then they finally will give it up, right? And same thing for Monster and those sorts of things, right? These products usually have very good gross margins and margins in general. Look at the net margins of these companies. Is it NVIDIA? No, but it's still great net margins on these companies, usually 20% plus, right? And if you look at Celsius, very strong revenue growth expected this year and next year. But the question is, will they actually be able to put up that growth, next year? And when you see something like this, you've got to look and you've got to, because, 1000xstocks.com, what we're doing, we're taking, analyst kind of opinions there, right? And kind of funneling it down to what's kind of average estimates from kind of what we're seeing out there, right? You got to wonder, are analysts off? Maybe this company doesn't grow 41% next year. Maybe they grow 20%, 30%. And then if you're talking about, let's say they're going to grow 20% instead of 40% next year. Well, suddenly you're not going to be willing to pay nearly as high of a valuation. If a company's growing 40%, you're willing to pay significantly more than if a company's growing revenues at 20%, right? That does not mean your company's finished. That does not mean that stock's done forever. That just means the valuation has to come down, right? And so, if all of a sudden everybody became confident that, let's say, Celsius is going to grow revenues 20% instead of 40%, well, suddenly people might be willing to pay $50 for Celsius stock instead of what they're paying today at $77 a share, or what they were willing to pay on Friday, which was $90-something a share, right? That's where you get these big downfalls of business models overall, right? So I can't make a strong case for or against Celsius. I can't. What I can say is obviously they've done a tremendous job growing the business, right? And growing the brand. But now things get much harder for them. Because now they have to grow into an overall drink giant. The market cap on this is a $20 billion plus market cap from what I remember. So now they need to become Monster. They need to become Red Bull. They need to become Coca-Cola. They need to become Pepsi. And can the company do that? And that's a whole different set of questions. It's one thing, can you grow a successful drink brand and get a lot of customers behind you to support your product and drink it day in and day out, right? It's another to say, can you become Coca-Cola? Can you become Pepsi? Can you become Monster? Can you become Red Bull? It's a whole different ballgame, right? And I can't confidently say that they're going to be able to become that. I can't confidently say they're not going to be able to become that as of right now. It's just, so for me right now, I think it's kind of a no-touch situation. And, I'll do some more study on the company. At the end of the day, if I wanted to buy Celsius, I either need to get this valuation at half of what it is right now, if not 60% down from here, or I need to be very confident that this company will be Monster. They will become a $50 billion, $100 billion market cap. And they can grow that big. So it needs to be one of those two scenarios need to happen for me to go ahead and say, you know what, I got to start buying Celsius. So we'll see what happens here. Now, here's the deal. Okay, if you're wondering, is this stock about to go a lot lower over the coming next couple weeks and next couple months? If we keep getting in track channel data that looks weak and they're losing market share and pricing's bad for the next several weeks, this stock will not stop crashing short term. It will fall another 20, 30, 40%. Because that would just kind of confirm everything we're seeing here. Now, if we see a major bounce back, market share bounces back, pricing bounces back, everything's looking good again, then Celsius will be right back to $90 to $100 because then people will say, the growth story's back on. That was just a fluke thing. Don't freak out over that. This is just like the initial wave of people kind of panicking just some of the early folks got out. If all of a sudden you get next week, the following week, more bad data, that's when you talk about big folks start to exit the stock, and you talk about some major downward pressure on the stock. And also, next thing you know, Celsius shares are, $60, $50, $40. And it happens quick. But the numbers have to keep, getting worse and worse for Celsius for big money to say, oh, dude, we're moving on. We're out of here for now. We'll come buy it back. Because we know Wall Street has no, thought process long term. They actually don't really care about Celsius's next 5, 10 years. They don't. They care about Celsius's next 6 months. They care about what's the numbers this coming quarter, what's the numbers a quarter after. That's about it. And if all of a sudden those growth rates and those quarters come into question, that's what big money says. We're out. We'll come see you when you get your numbers right again. Okay. So we'll see what happens here. That's the story in regards to Celsius. Let's get into NVIDIA, which is having an absolutely epic day.
More on the tech rally and her top picks. Joanne Feeney, she's the portfolio manager at Advisors Capital Management. Joanne, let's start off with NVIDIA as it approaches a $2.8 trillion market value. Has it gotten ahead of itself?
It's going to be the biggest.
Yeah, I don't think so, David. I mean, it's always the case that, a stock's price will build in its future, right? And its future growth prospects are really quite impressive. But to put it in perspective, notice that NVIDIA's earnings over the last year have gone up 460%. Its stock has gone up 250%, but earnings, are leading the way. And so actually the multiples come down in the last year. Nevertheless, right, the stock continues to rise on expectations that its growth will be more long lasting than for many other companies in the market that investors can own. So that's why the stock is where it is, and we do see an awful lot of growth ahead of it. Competition is coming, but it's going to take some years for that competition inroads.
Yeah, and what else then? I mean, to the extent that obviously we sit here and talk so often about this opportunity when it comes to to generative AI, beyond NVIDIA, Joanne, are there other names that you think are particularly the greatest beneficiaries?
Well, there's a lot of ways one can invest around AI. Obviously, the picks and shovels through NVIDIA is one way, but another way in that same group is a company like an AMD, which is developed.
I knew it. I was like, how long until they mention AMD? Okay, so AMD, great company. We all know this, right? The issue with AMD, I'm going to show you guys. There's actually 2 issues with AMD. This is the first one, okay? The forward P on AMD is higher than NVIDIA, despite numbers that are horrible compared to NVIDIA, right? In positioning in the market, that's not even remotely close to as attractive as NVIDIA. So that's one issue in regards to AMD. The second issue is the growth rates have been very, very sad in regards to AMD. A lot of people, especially this past quarter, I think was a huge disappointment to a lot of folks. Because you looked at those AMD numbers, you were expecting to show significant growth, and they came in with these little teeny numbers, and it's like, what is going on, AMD? That's because 2 of their businesses are in a very bad spot right now. So data center was trying to make up for it, but the numbers were not impressive at all in regards to AMD. And so that's the issue with AMD is you're paying the same multiple, but it's like, why would you buy AMD over NVIDIA? Why would you buy the number 2 instead of the number 1, right? Why would you not want to be the company that's branded as the true AI company, not like the other company? At the end of the day, you usually want to pay up for the best of the bunch. And if you compare, AMD is a great company, but if you compare them against NVIDIA, they're not as good. They're not. And so would you want to own a inferior company at roughly the same forward P? I don't know. That's where things get difficult here in regards to this, right? I like AMD. I wouldn't be surprised if the stock does, pretty decent over the coming years. But the bottom line is, if you got to own one, like, why not go with the best? The true best, man. That's bottom line in regards to that. By the way, speaking about going in with the best, what I'm showing you here, this is 1000xstocks.com. If you would like to apply for access for this, you can go to 1000xstocks.com and fill an application. We'll see if we can get you in the product. Right now, we have the comparison feature. All this usually takes like 30 minutes to 45 minutes to do this. You can do it in a matter of seconds, compare stocks all against each other and all the different metrics. We're working on adding another 14 metrics, hopefully looking to get that up this week or next week. We're also looking to add many other features. We now have earnings calls on the service, so you can type in, NVIDIA, listen to their conference call. We have transcripts on here now as well. You can focus on just one stock in the metrics if you want, right? And then additionally, we're working on several things behind the scenes that I want to talk about right now that are big things. So we will be going up on the price in the future. So, if you were looking to get into the product, let's just put it financially, you're incentivized to get in now rather than wait 6 months, 12 months, because, pricing will continue to go up on that as we add more and more new features.
Chips coming out this year to do also some work in AI, more on the inference side. But that's a real opportunity, and they continue to gain share against Intel and servers and PCs. But beyond that, look at a company like Broadcom. It's more diversified.
Yeah,
it's not only in the
Stephanie
iPhone,
Link's favorite
but
stock.
it's also enabling AI inference chips with collaboration with Google. So, that's an opportunity. Plus, they're diversified into enterprise, into cloud. They have yet to reports coming up in a couple of weeks. Look for some weakness on the cloud and enterprise side, but their opportunity in AI is really quite strong, and they generally have very high margin businesses because of their deep technology moats.
I know we're in growth mode for all these companies in terms of adoption and demand, but how do you think about the sustainability of revenue growth for some of these companies that are in early, and how long that lasts?
Sarah, it's so interesting to look at those NVIDIA numbers as just an exclamation point on how the world has changed. You look at their growth last quarter, 460% earnings growth. Boy, that's going to drop an awful lot this quarter. It's only going to be 260% earnings growth. But this is just this big step up change in the opportunity ahead of them. A year from now, NVIDIA earnings are likely to be growing at 25 to 30%, and that's in expectations. Other companies that are just getting involved, right, will not see the same kind of step up. This really was a unique opportunity for NVIDIA. But, look into the software side, too. A company like ServiceNow, which we own in our growth strategy, is a company that's deploying applications enabled by AI. And so it's really hard to sort of get your head around some of these multiples because a lot of the earnings and the cash flow is ahead of these companies. And so, this is an unusual time. It does take thoughtfulness about which companies really have developed applications that customers are paying for. So those are a few examples.
Hey, Joanne, there's been some chatter that to the degree that there's a risk of a melt up, a lot of that's going to come from retail participating a lot more in equities. We've got these Robinhood metrics we watch. The memes are back. NVIDIA splitting 10 for 1. Are you in that school?
Yeah, we tend to think that the market's going to be driven, more by the institutional investor. I think that the 10 for 1 split at NVIDIA and other companies that have done something similar really helps the employees. It enables them to give them, stock options, et cetera, in the company. And we think that's useful and certainly helpful for retail investors to be able to own some of these things in their portfolios. But overall, what we're watching more broadly is the strength of the consumer. And while they don't have that big stockpile of savings to work off of, they still are, basically seeing a world in which they can get jobs if they want them, where their nominal wages are still keeping now ahead of inflation. So the spending power of the consumer is still pretty solid. But on the flip side, there are those concerns about how much they're borrowing against, paydays coming up in the future through those new apps. There's concerns about, credit card balances, although relative to income, they're not at high levels. But some segments of the consumer are clearly suffering. And we're seeing that in the reports from some of the retailers who are talking about a little bit more price sensitivity among their shoppers.
Yeah, newsflash. Folks that have payday loans aren't moving the market. Like, you know, this expectation that retail can move the market and they're moving the market. No. No, not at this point in time. During Rona, different situation, stimulus, everybody at home, all those sorts of things. But to be trying to even make some sort of case around that right now, it's just utterly ridiculous. All right, NVIDIA is heading toward $10 trillion market cap. You gotta be flipping my flapjacks.
And is NVIDIA becoming the most valuable company in the U.S., or do we see these other tech giants moving higher along with it?
Yes, and let me remind you that I had said years ago that NVIDIA would surpass Apple to become the world's most valuable company. Now it's nipping at its heels. What is going on with NVIDIA that is unique from a company like Apple or Microsoft is, as you know, it's fueling the AI infrastructure. This is really important to understand because Hopper architecture drove us to about 90 billion data center revenue. NVIDIA is quickly releasing the next architecture. It's called Blackwell. It will be out before the end of this year. That, we think, can bring us to a $200 billion data center by the end of fiscal year 2026. So that's calendar 2025, meaning that this next cadence of the generation, which is Blackwell, will equal or slightly exceed Hopper. And there's reasons for that, which is that it will empower and enable trillion plus parameter large language models, which is exactly where big tech is trying to go. So those components all together equal a very large hardware data center segment. Then we have software coming, which I could talk at length about, but I won't, I'll be brief. And then the third one is automotive. So we have a lot coming. This is very, very early for NVIDIA, and there's a few layers to it.
All right, so a lot coming. By the way, Beth, I know you're in Colorado, which I know is Coach Prime country. A lot of optimism. I know you guys.
So in regards to software side, it's important everybody understands, from NVIDIA making money off software, relatively new opportunity, very exciting for NVIDIA's long-term business model, right? But the one thing I'll say is the numbers are going to be very, very small from that for the next several years, okay? Because when you're building off of, basically zero to build that up, very small numbers compared to the overall company and what they're putting up. So it's definitely helpful to the valuation, but the numbers are obviously going to be smaller for the next few years. But 10 years from now, 20 years from now, that could be a massive business.
But your price target's kind of pending on a lot of assumptions, if you will. So one of the assumptions is that the estimates for data centers are too low, and also that the market for the TAM, I should say, for chips is also too low. You cite Lisa Su and other chip CEOs saying that basically the market's even bigger than we all think. Isn't this just a little bit bubblish? I mean, just this idea that no matter what the estimates are, there's even more room to go?
I'm glad that you brought up Lisa Su and then Intel's CEO as well. Lisa Su has a $400 billion data center segment by 2027. What my forecast is that NVIDIA will take the lion's share of that. Intel has a $1 trillion TAM by 2030. Again, my forecast is NVIDIA will take the lion's share of that. So I think that those TAM estimates are in line. And what now needs to be decided is who will get how much of the pie.
So you're also saying that their moat is sustainable, even as we see, a real build out of chip production here in the United States. And of course, other companies are trying to catch up, not to mention the number one customers, I should say, are making their own chips and actually becoming competitors. So how much longer do you see this moat lasting for another 5 years, or does this moat continue to last because you feel like NVIDIA's...
Sir, come on, man. Here's the deal. As long as NVIDIA keeps the pedal to the metal and keeps coming out with better chips and better chips and better chips, guess what? Their moat stays around, right? As long as they're way ahead of their direct competitors and indirect competitors, that's an impossible question to answer. The likelihood is NVIDIA stays ahead of everybody if they keep the pedal to the metal and Jensen keeps leading this company, right?
You need to ramp up.
There are a few elements there, which is that when big tech makes custom silicon, they're mainly doing it to optimize their own applications. They won't ever become merchant. They won't ever compete on merchant silicon. Yep. So what that means is they're not going to commercialize and sell chips the way that NVIDIA does. So NVIDIA has an open runway there. Mm-hmm. Secondly, the CUDA software platform is what developers learn on. So similar to iOS is really what locked people into the iPhone because developers were developing applications for the iPhone. The same thing is happening with NVIDIA, which is that the CUDA platform is what software engineers, AI engineers are learning in order to program GPUs. So that helps lock them in. And that combination, right now, I'm calling it an impenetrable moat. So This is not a moat that I see being something that would crumble or erode. Although I do think that, let's fast forward 2030.
Wait. Let me just stop. Impenetrable
Sure.
moat, $10 trillion market cap. Billion's nothing. $10 trillion market cap. I think we do have to play devil's advocate. I know Kramer watches. He's going to send me an email right after this, but we got to play devil's advocate. In fact, somebody already did it for me. KKR's Henry McVeigh spoke to us last week, and he downplayed the role of AI when it comes to the increased productivity and increased profitability. I want you to listen. I want to get your take on what he has to say.
Okay.
Right now, we're seeing a surge in productivity. It's not AI driven. It's driven by the CapEx that we saw during COVID, and that's led to more corporate profitability efficiency.
All right, your take. It's not necessarily AI, which is seeming to be the consensus. I think a lot of us thought AI is what's really helping this earnings season. He says it's CapEx, actually from a couple years ago during the pandemic. Agree or disagree?
Disagree. Strong disagree. CapEx has been going up phenomenally. Just happened again. Q1 reports came in for full year guide. But ultimately, what we're having two different discussions, and that's where people are getting confused, is that corporate productivity is one thing. Big tech is an entirely different thing. Meta can optimize social media and ads without having to go out and market productivity to customers. Google, obviously, we're going to see that with the search engine. Apple has a wide runway on what they can optimize. Tesla is another one. Lots of R&D going on at that company. They don't need to go out and sell productivity like an enterprise company or an SMB. So those are two very different discussions. Big tech is already seeing the benefits.
Yeah, 100%. And, some people think, okay, AMD, let's say AMD can actually start seriously competing with NVIDIA, right? And let's say they get to a level that they're right there with AMD's right there with NVIDIA. People have this assumption that AMD is going to massively undercut NVIDIA's price. Why would they do that? Let's just say, hypothetically, they have just as good a chips. Why would they massively undercut? You think they're going to... Those two companies would still have a monopoly on the industry. Do you think they would just like, oh, let's charge half? No, of course not. It might be, okay, if NVIDIA can sell that chip for $40,000, maybe we sell it for 38, 37, 36. You know what I mean? And it's not like that. It's like, oh my gosh, let's just sell it, give it away for free. Let's sell it for $5,000, even though NVIDIA's selling it for $40,000, and we're going to take. No, that's not the way this works, right? These two companies work very well together. Jensen and Lisa. They got to look like they're competitors, but man, they actually compete very well together, if you know what I mean, right? And so, that's just a whole situation in itself, right? So NVIDIA, I will say there's much more of a... NVIDIA, up until this point, has really been... The reason the stock's gone up so much is all based on fundamentals. It's not hype. The fundamentals, the numbers are there. The numbers in fundamentals, net incomes, earnings per share, revenue... Those are not hype. Those are real. That's reality. The numbers, right? Now, we could start... I'm feeling a little bit like we're going to start getting into a hype cycle in regards to the stock price, where suddenly the fundamentals are one thing over there, but it's going to start becoming about, oh, it's going to be a $5 trillion company. It's going to be a $10 trillion company. Next year's chip's going to be priced at this. There's this going on, that going on, the stock split, right? And so the discussion could become about a lot of other things. Oh, NVIDIA is going to announce a huge buyback next year because they're going to have so much new cash flow coming in. They're going to be able to do a massive buy. I think that's what the discussion's going to start becoming, which is going to, it's very helpful to the stock price, but then you kind of get more into a hype cycle, and then the stock can make some sort of really parabolic run, right? And then what happens is the stock starts to kind of flatten out after a bit. And then something happens to the business model, right? Maybe the economy goes worse. And so suddenly Meta's growth rates aren't as strong and the stock price starts getting hit. And same thing with Amazon and all the other big tech companies, right? And so then also they're like, crap. Revenue is not what we expected, so we're going to have to pull back on CapEx, whatever. And does that happen this year, next year, the following year? I don't know. But that's how you could get something like that to happen, right? And then suddenly they all, as a consensus, kind of all pull back at the same exact time, right? And if at that moment you get investor pressure saying we're not really seeing the returns from AI, right? That's how you could get something like that to happen, right? And then suddenly the orders aren't quite coming through as strong as they were, right? And so that just, you got to understand that. And so then you could have obviously a big downfall in the stock. But that's likely not coming for probably this year and maybe not even next year. It could be next year. Like let's say, middle of the next year, NVIDIA, reports a quarter and growth is down on a year-over-year basis or is very slightly up. Right? Or guidance that's very slightly up year over year. People are going to flip out of this stock very, very quickly at that point in time if the stock has ran into that, right? And then all of a sudden it starts a big next kind of downward move. And that's kind of nastiness that has to work through. And sometimes it takes a year for that to happen with NVIDIA stocks. Sometimes it takes a couple years. And then they'll get their business back going again. And then excitement will happen again. And then they'll have another big chip cycle of booming. And then, the story will be beautiful because these chip cycles usually last 3 to 5 years, right? That's just the way it's been for NVIDIA. And so sometimes 2 to 5 years, but let's say 3 to 5 years. So we're in year 2 of the big cycle, right? So we likely have at least one more epic year for NVIDIA. And there's a potential of 3 more epic years for NVIDIA in terms of these numbers. So just, food for thought. There's still a possibility for 3 more epic years after this. But there's a high probability of after this year, at least one more. So I would say at least one more epic year of growth, maybe 3. But if the stock price gets too extreme and the forward P gets too extreme on NVIDIA, then the stock could actually peak this year. So that's an important thing to understand. If the valuation gets too out of hand here, we could actually, even if the fundamentals of the company get better over the following year, it could actually have already peaked the stock and it already is starting to set up for the crash that comes, a year later, a couple of years later. That happened in Tesla stock, perfect example, right? Tesla stock, we can go back to the end of 2020, beginning of 2021. I mean, it was, everybody was convinced everybody's going to buy an EV and it's going to happen, really soon. And then all of a sudden, Tesla's growth rate started to slow a little bit. And people said, ooh, what's going on here, right? And there was kind of that moment where it was like, oh, what's going on here with Tesla? The growth rates are starting to slow, right? And the valuation had climbed so immensely in regards to Tesla. I mean, the P's were ridiculous. The forward P's were ridiculous in regards to Tesla, right? Let me pull up Tesla here, TSLA. There it is. So, we look on a 5-year basis. I mean, the stock obviously made a parabolic run, and it made this run really. It wasn't just hype and excitement about the stock. It was about the business model. Changed massively for better from a money-losing company that people were like bankruptcy, blah, 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 to also this huge money-making company, and everybody got convinced about EVs, right? And then it made this last epic run that ended in the fall of 2021, right? And then Tesla's fundamentals of the business still actually looked really good in much of the early part of 2022, right? But the stock already started to fall because people started to sniff out something's not quite right here in regards to Tesla, right? And obviously it had the epic fall, and then January 2023, stock bottoms out and comes back. And stock's still up significantly, even though it's had a most recent crash, still up significantly from those January 2023 lows, right? Shares got all the way down to about $101. On TradingView here, shows 112, but it got all the way down to 101. I know because I have shares in my portfolio from like 103 from that January timeframe. And so, Tesla, massive epic run in the stock price, right? Made a lot of people, including myself, a lot of money, and it was beautiful. But then the fundamentals, right, kind of felt like they were starting to peak a little bit late 2021, and then fundamentals still look great in 2022. But the growth rates on a sequential basis started to trouble people. The order numbers, the growth wasn't as strong as it started to come in with in 2022, right? And then we know what happened with the business model in 2023, 2024, right? And so could that happen with an NVIDIA where the stock price peaks in 2024? 2025 is still a great year for NVIDIA's fundamentals, right? The numbers are still phenomenal, but people start to sniff out about weakness likely coming, and so they start to kind of slowly move out of NVIDIA throughout 2025, and then let's say NVIDIA's fundamentals get much worse in 2026, 2027. It's not a guarantee, but it's definitely a serious possibility that I think everybody should consider out there because these companies do go through some major cyclical downturns. That's NVIDIA. Like, that's just the way it is. And until their software business is really built up, which is going to take for NVIDIA's software business to really be built into a massive beast, that's going to take a good, 5-10 years. So that's not happening in the next 3 years, right? And we're really, if you're focusing on the next 3 years, that's where we get into some of these problems, right? So anyways, it ended up being a much more in-depth video than I thought it was going to be. I hope you guys enjoyed this. It was a lot of, discussion there at the end. So appreciate y'all joining me as always. If you are looking to get access to 1000xstocks.com, you can go to the website and go ahead and apply for access. We'll see if we can get you in there this week or next week. Much love and have a great day.